Hello friends, welcome to today's session. In today's session, we will be learning about several items on the income side of the income and expenditure account and its accounting treatment. In earlier videos, we have already discussed and we have learned about the receipt and payment account, income and expenditure account, their contents, and also subscriptions in detail. For those who are new, please do watch these videos to get a clarity on the topic. And for those who have not yet subscribed, please do subscribe to get content notification of all the upcoming videos. In today's session, we will learn about the items you would be crediting to the income and expenditure account. Now, we will start with the first one being subscription. I have created a detailed video on the term subscription, how to calculate the amount of subscription which has to be credited to the credit side of the income and expenditure account. You can go and watch that in detail. But for the time being, the item subscription is described here in brief. We'll discuss it in brief. Subscription. What do you mean by subscription? Now, if you become a member of any sort of club or some sort of organization where you're taking membership to avail some service that they're rendering, then you would know that you will have to pay some amount on a regular basis. So that amount is called as subscription. So the meaning of subscription can be that as amount that is paid periodically, means on some regular basis by the members. Those who have become the members of the not-for-profit organization, they pay these amounts periodically. Why? To keep their membership alive, so that they continue to be the members of the NPO and they can avail the services which are being rendered by the NPO. That is subscription. For detailed discussion, please do watch that video on subscriptions. Now, what type of item is subscription? Subscription is an item of income. It is a source of fund for the not-for-profit organization. And we can classify the income, the item, as an item which can be credited to the income side of the income and expenditure account. It is in nature of revenue receipt. It is of routine in nature and can be utilized for the purpose of meeting the routine expenditures of the not-for-profit organization. So it is a revenue receipt and it would be credited to the income and expenditure account and utilized to meet the regular expenditures of the NPO. So this is the accounting treatment of subscription. Moving on, we will learn about the second item which you will find in an NPO. It is called as entrance fees. You would find it by different names. It can be also named as admission fee. Now, when you are taking for the first time membership, you would be required to pay certain amount, like it is titled as entrance fee or admission fee. While taking the admission into that, you have to pay that particular fees. So this type of fees which is paid, so the amount which is being paid at the time of admission into that organization for the purpose of membership is called as admission fee or entrance fees. Now, what type of item is this? This is also a revenue receipt. Means it is also available to be used for the purpose of meeting the routine expenditures of an NPO. And so, where would we find this? We would be crediting this item also to income and expenditure account and charging the routine expenditures against it. This is also one of the source of fund for meeting the routine expenditures of an NPO. Now moving further, next item that I'll be discussing is called as life membership fee. Now what do you mean by life membership fees? From the term only you know that it is life membership fee, means whatever is being paid by the member here is going to give him some benefit which is for his lifetime. As long as he is a member, he will be able to utilize that particular service. So this type of amount is paid once, but the services that you are going to get out of this will be available to the particular member for his life. So once the life membership fees is paid, that person as a member will be able to avail the facility whatever is being provided by that not-for-profit organization for his life. Now it is one-time payment. So from that we understand that it is an item which is in the nature of capital receipt. This would not go into your income and expenditure account. It is nature of capital receipt. What type of item go into the income and expenditure account? It is only the items of revenue nature. So revenue in receipts and the revenue payments. The income and expenditures of revenue nature are going to be going into our income and expenditure account. But here this life membership fee is a capital receipt. So capital receipt would go into our balance sheet. So where will we be putting it? We will be putting it in the balance sheet on the liability side. We would be adding it to the capital fund. So this is the accounting treatment of life membership fee. Now moving further, we will go and discuss the next item which you could find in the income side, which would go to the income side. You might find item called as special receipts. Now what do you mean by special receipts? These are the receipts of the NPO which are for some special occasion. Like if you are a member of a sports club or some recreational club, that club might be organizing on an annual basis a dinner. It might be hosting a dinner so that all the members would be able to know one another. So for the purpose of socializing, once a year, such a occasion might be created, and when money is being collected from the members who want to participate in that annual dinner, that type of receipt from the point of view of NPO is a special receipt. It is being received for a special occasion. So whatever amount that is being received would be utilized only for the purpose of conducting or organizing that particular event. So example for the special receipt as I gave you was an annual dinner which is being organized by a club for its member. It collects the money, organizes that annual dinner and spends the money it has collected in organizing that dinner. So what is the type of item here? Basically this is also in the nature of revenue receipt because it is being collected and would be spent on the members only. And here basically the purpose is for that particular special occasion. So normally when the amount is collected, it cannot be mixed up with any other amount, cannot be used for any general expenditure. So a separate account would be maintained for that particular special receipt. And once that event has been organized, so after the event, the expenditures would be subtracted. Expenses would be charged against the receipt. So once that particular event has occurred, what is done? Whatever the expense have incurred, that will be charged against the receipt, and according to the net amount can be written on the debit or credit side. means if the receipt was 1 lakh and the expenditure was about 90,000, then 10,000 is a surplus after organizing this particular annual dinner. So that would come on the credit side because the receipt was more. Or alternatively, if they had collected 1 lakh but 1 lakh 2,000 was the expenditure. So they had to spend 2,000 more than what they collected. Then the 2,000 is to be debited to the income and expenditure account. Or alternatively, what can be done is the receipts can be put on the credit side of income and expenditure account, and the expense which is incurred for that particular occasion can be put on the debit side of income and expenditure account. So automatically the net effect comes into the income and expenditure account. So this is how, when there is a special receipt for a special occasion, it has to be utilized only for that special occasion. So this is the accounting treatment. Now suppose there is one more point there, that if the event has not been conducted till the end of the year, then what do? You keep it in a separate account, show it in the balance sheet as amount which is still there, and when it is utilized in the next year, then you charge it, put it into your income and expenditure account. So that is another important point to be noted. I hope that is clear. So now next we'll move on to the next item, that is donations. Now, the main source of fund for a not-for-profit organization is donations. When people donate to NPOs like a charitable hospital or some other charitable organization, educational institution, that money is utilized so that they can give services at very nominal price to the people who come to avail their service. So donation is a very important source of fund for a not-for-profit organization. The donations can be of two types. First one is a general donation where the donor does not specify. So donor does not specify any purpose. So no specific purpose is specified when a person is donating. He does not specify that you have to utilize this money that I am donating for this particular purpose. He just donates. He just gives the amount to that NPO. NPO can utilize it for the normal whatever purpose it is running for. So that type of donation is called as general donation. Now, unless a specific purpose has been stated when the donor is donating, it will be treated as a general donation. And when it is a general donation, then what is the accounting treatment of that amount of general donation? It is a normal receipt which can be utilized for the normal operating activities, no specific purpose given, and therefore it would be credited to income and expenditure account. It can be used for the normal any activity of the not-for-profit organization. Who is donor? Donor means a person who is donating, who is donated to an NPO. That is donor. Now the second type of donation is specific donation. So now from this term only we understand the purpose of use has been specified. So when a person is donating a certain amount to an NPO and is specifying the purpose for which it is to be utilized, then that is called a specific donation. Now when this purpose has been specified, then the not-for-profit organization will have to utilize it only for the purpose that it has been donated for. Like for example, a person might donate amount, say 20,000 rupees, saying that use it for building purpose. Then that is, like as I told you, for building purpose means it can be utilized only for the construction of building. It can be for construction of a library. If it is an educational institution, then people might donate saying that we are donating for your library. Then the money that has been received has to be utilized for the library, for construction library, for maintaining library, for buying books for the library, and so on. If it is for building, then for construction maintenance of building only it can be utilized. Like that you can have different, like if it is a sports club, they might collect donation when a pavilion has to be built. Then at that time they might collect donation, and the people who are donating for the construction pavilion. So it is a specific purpose for which they are donating. So it can be utilized only for the purpose of constructing that particular pavilion. So these are some examples of how a person can make specific donations. Now, when an NPO receives donation in this form, that when this purpose is specified, then what is the accounting treatment? It cannot be utilized for any purpose as it wishes. It is utilized only for the purpose specified. And therefore, this amount which is being received as specific donation is to be capitalized, which means we would take it into the balance sheet. A separate fund would be created, like building fund, pavilion fund would be created. So fund is created, and when it is utilized for the purpose, then the amount would be deducted from that particular fund and utilized, and would get converted into an asset which would come on the asset side of the balance sheet. So basically fund is created, and where would we find this fund? On the liability side of the balance sheet. And after that, once a liability is created out of it, the equivalent asset, it would get deducted from the fund and would get created into an asset and would be seen on the asset side of the balance sheet. So this is how NPO can receive donation in the form of general donation and specific donation. And this is how the accounting treatment varies from general donation to specific donation. I hope that is also clear to you. Shall we move on to the next one? Now we will learn and discuss about legacy. Now, what do you mean by legacy? When amount is received under a will of a deceased person, then we call it as legacy. So what does this mean? If a person, you know that every person can write a will, whatever wealth he has, he can write a will, and in the will, the person will specify who is to receive how much out of his wealth. So suppose a person has written a will, and in his will he has said that he is to donate from his wealth, say suppose 1 lakh rupees, to a charitable hospital or to an educational institution. Then once he dies, his will would be taken out and executed, and from his wealth 1 lakh would be donated to that particular organization which has been specified in the will. Now, this type of receipt, when an amount is being received by a not-for-profit organization as per the will of some deceased person, then that amount that is being received is called as legacy. So this amount, whatever is being received, can be of again two types. When the purpose has not been specified, it is a general, so it can be used for any purpose. So what do we do when it is a general legacy donation? We credit it to the income and expenditure account. It can be utilized for any purpose. But sometimes the purpose for which it is to be utilized is specified in the will. The person leaves 1 lakh and says that you have to utilize this 1 lakh for this particular purpose. Then the legacy donation receipt here is a specific donation. So at that time, again, where will it go? Like our specific donation, same accounting treatment. In the balance sheet, a fund would be created on the liability side, and it would be utilized for that particular purpose that has been specified by the deceased person. So this is how legacy is an amount received, and this is how we would be treating the two types of general and specific legacy donation. Now, you would say, how would we know it is specific or general? If it is purpose is specified, then it is specific. If no purpose specified, you assume that it is general and you could utilize it, you could credit it to the income and expenditure account. So that is how legacy donation would be treated. Shall we move further? We will learn the next term, that is grant. Now, in the not-for-profit organization, you would find a term called as grant. Now, what are grants? Normally, government will sanction some amount for some specified purpose. So, amount is received here for specific purpose. Like example, government gives grant for polio eradication. So in this case, the government is going to be giving to the hospital, which is being a charitable hospital. It might be giving grants of certain amount. The NPO receives that amount. It can utilize that amount received from the government only for the purpose of polio eradication. That is for administering those drops to the kids below 5 years. So only for that purpose it can be utilized. So from that, what do we understand? Now, as it is for specific purpose, you would take it for that specified purpose only. So it is in the nature of a capital receipt and it would be shown in a balance sheet. And when it is utilized, it would go out of the balance sheet. But if the purpose has not been specified, if the government grant given, they have just given grant. Being a charitable organization, some grant has been given. But if the grant is of general nature, where the purpose has not been specified, then you can treat it as a revenue receipt. And by now, you would know how to treat a revenue receipt. We would be crediting it to the income and expenditure account. Right. So if it is in the nature of revenue receipt, we credit it to income and expenditure account. So in grant, normally purpose is specified and can be utilized only for that purpose. But if a grant has been given and you don't find any specific purpose that has been specified, then you take it as a general grant and you take it as a revenue receipt and credit it to the income and expenditure account. Is that clear? Moving further. Next item that you will be finding on the income side of income and expenditure account is sale of used sports material. Now, here we are talking about a sports club. If it is a sports club, they will be providing the members with sports equipment which they can use. They can come there, they can play those games and go back. So those sports material are going to be purchased and maintained by the club. So those sports club, when they are purchased, they are going to be capitalized and they are going to be depreciated. And then when they reach a particular stage of usage and they are no longer usable by the members, what is done? It would be sold off. Now, so that is the sports material which we are talking about here. The important point here is that whether the sports material value is still there in the balance sheet or whether it has been written off completely by transferring to income and expenditure account. That will decide the accounting treatment. So first situation we'll take is that there is a balance in the balance sheet. Means the value of the sports material we are talking about, which is being sold here, is not completely written off. Its value is still there. It has not been totally depreciated or has not been totally consumed and it has not been totally written off. Still, there is some value in the balance sheet. Then, how is it going to be treated? What is the accounting treatment here? Now here, we have the book value still in the balance sheet and that material is being sold off and some money is being realized. So we have the book value and the sale value. we can find the difference and find out whether it has been sold at a gain or at a loss. Suppose the book value left is 2000 and it has been sold for 2500. Then what happens? You have sold it for 500 rupees more. So there is a gain on sale. So that gain you would take and you would put it on the credit side of the income and expenditure account. Alternatively, if this will take the same book value of 2000, but when it was sold for 1400. Then it has been sold at a loss. You're getting only 1400, whereas in books it is valued at 2000. So there's a loss of 600. That 600 would be put on the debit side as loss on sale of sports equipment. So this way you will ascertain the gain or loss and you would put it into the income and expenditure account. The gain on the credit side and the loss on the debit side of the income and expenditure account. And the book value would be subtracted in the balance sheet and the value of that sports material in the balance sheet would go down to 0. It is going out of the balance sheet. So this is how when the balance or the book value of the sports material is still there in the balance sheet. But however, there could be another situation where the item has already been totally utilized and has been totally debited to the income and expenditure account as consumed. So it has been totally consumed. There is no book value at all. It has been completely utilized and on the debit side you have put sports material consumed and it's gone out. But still that physically it is still there. Although it has been consumed, the book value has gone down and has been debited. Physically it is still there and probably as a scrap you are able to sell and get some amount out of it. Say 1500 is being received by selling it. Now there is no book value. It's been totally written off, debited. So all we have is that 1500 that we are receiving by selling that material. So that entire 1500 is your gain. So what will we do? We will put that sale receipt of 1500 that you receive to the credit side of the income and expenditure account. Entirely it is a gain. So there is nothing of any book value to be reduced. In this case gain or loss is taken and you would be reducing the book value in balance sheet. But in the second case, because there is no value left in the balance sheet, the entire sale proceed is a gain and that will be credited to income and expenditure account. I hope that is clear. In case you have any sort of queries or doubts related to this video, please feel free to leave your comment and doubts. I will definitely try to clarify the same to the best of my ability. Now moving further, we will also learn the next item, that is sale of old assets. Now there might be some assets which are lying there which is being sold. So there is balance in the balance sheet. Some value is there. So now that is being written off. That is being sold out. So when you are selling, you are going to receive some money. You would be comparing again here the sale value with the book value. So we are going to compare here also the sale value and the book value. And the difference would be a gain or loss. When would it be gain? When the sale value is greater than the book value. You are selling for more than the book value, it is a gain. If the sale value you are getting by selling it is less than the book value, it results in a loss. So we compare it and then whatever is the gain or loss, that would be credited to or debited to the income and expenditure account. And the book value would be reduced in the balance sheet. So if, as I told you, if it is sold for a gain, the gain portion, suppose the book value is 2,000, sold for 2,200, the 2,000 would go, reduce the book value in the balance sheet to 0, and the 200 extra that is being received goes to the credit side as a gain on sale of that asset in the income and expenditure account. If it is a loss, suppose the same 2,000 sold for 1,700, then reduce the book value by 2,000 and 300 would go into the loss, that is debit side of your income and expenditure account. So this is how we would be treating the item of old assets which is there in the balance sheet where it is being sold out. Finally, there are certain other miscellaneous items that you could find, like sale of old newspapers. Now, being a club or a organization which is providing service to members, people will be coming on everyday basis to avail the services. So, newspapers, magazines, or on daily basis newspaper and weekly magazines all will be lying there in the reception area for the members. They can relax and they can, in the lounge, they can read it. So those newspapers which are going to be sold, what would be as scrap? What would be the account treatment of the money which is received when it is sold off? That we are trying to see here. Other than this, you can have certain other items like sundry receipts, any receipt which like you can have interest on investment. And here we are not talking about any specific investment related to some fund. Fund balances might be invested outside and interest might be received. We are not talking about that. We are talking about other investments other than related to any specific fund. If any amount is received, that type of interest. What are these types of receipts? How are we going to deal with it? These amounts which are being received are in the nature of the regular income. So it is in the nature of revenue receipt. So you know the account treatment by now of a revenue receipt. We credit it to the income and expenditure account. So this is how you can have several other receipts. Few examples I've given here. These are going to be credited to the income and expenditure account. So I hope today's discussion on these several items which you would find on the credit side of the income and expenditure account clear. If you found this video helpful, please do like and share it. And if you have not yet subscribed, please do subscribe to my channel to get continued notification of the videos that I'll be posting. And please do leave your valuable comments in the comment section below. Thank you for joining me today. Have a great day. Stay home, stay safe. Thank you.